A range-bound session sees Dalal Street end higher. Nifty ends near 25,000. Auto and IT stocks gain the most. Banks underperform the blue chips.
Relief for JSW Steel over its acquisition of bankrupt Bhushan Steel. Supreme Court orders status quo on liquidation proceedings. JSW and lenders confirm that review petitions will be filed. JSW management is upbeat on getting a refund if Bhushan Steel goes into liquidation.
MSCI and FTSE indices announced weight reductions for Eternal following the company lowering its foreign ownership limit to 49.5% from 100%. The stock slips on anticipated outflows of over $800 million.
You're watching us here on Markets Forward, your go-to show where we aim to get you all the key data points to get up for the next trading session while telling you a lot more about the trading session that took place. I'm Manglam Malu, with me, Ekta Batra. Ekta, good evening. It's been a good day today. Give and take everything. We managed to conquer that 25,000 mark on the Nifty. The broader market's doing a shade better. We had nearly 60% stocks advancing, 60% more stocks advancing than the number of stocks that declined.
Hi, Manglam. Yes, absolutely. It turned out to be a good session for us today. We had, it was a steady start to the week. We had no problem in terms of the key indices and the Nifty hovering around 25,000. The mid-caps, like you mentioned, marginally outperformed, giving indication that the advanced decline ratio was in positive terrain. But we do have you covered for the next 20-odd minutes with all the big news and the key developments on Dalal Street, top corporate voices, and the events to track ahead. So let's kick off the day with the market action. Manglam, what a great day it was, start to the week.
What a great day it was, right? For starters, we did see the GIFT Nifty indicating a 50-point uptick. The market opened higher. Thereafter, we went all the way up to 25,070.80. Thereafter, we saw a bit of a sell-off back below the 25,000 mark. And thereafter, it's been steady as she goes for the frontline index, barring the volatility that we saw in the first hour of trading session. What did well today? We did see the return of a lot of these global-facing names on account of maybe some sort of tariff relief coming in for Europe. So we had the metals do well. We had the IT index, which gained about 1%. And we also saw FMCG do well because of the early onset of monsoon. So all these indices doing a lot better. What did not do as well as the other parts of the market was the Nifty Bank. And that's largely because maybe it saw a bit of a sell-off as we saw it move closer to its previous high of closer to 56,000. The other things that we'll be watching out for through this week. One, today we will keep an eye out on the flows that come in, especially from the FIIs, largely because it was a low volume market. When it came to FIIs, the US markets are shut because of Memorial Day. So a lot of the market today was pumped higher by the domestic institutional investors. The second thing that we'll be watching out for, how the market moves as we progress towards the week because of it being the May series expiry week. So we expect a bit of volatility, and that was actually reflected in the way the India VIX moved as well. So the India VIX actually went above that 18 mark, telling you that maybe the street believes there could be some volatility in sight.
Yes, absolutely. So that's what really took place in the markets. I just want to point out that the broader markets did see quite a bit of traction. So the mid-cap index did marginally outperform with a gain of around 0.67%. But we had the BSE small-cap index, which picked up a little bit as well. So it was up around 0.5% by the close of trade. So just watch out for this kind of outperformance to probably pick up a little bit of pace going forward. And like Bangla mentioned, we do have a lot in terms of cues to watch out for in the next couple of days. We do have a couple of numbers, the fag end of the earnings season, and let's see what the global cues throw up, considering the kind of commentary and what's taking place in Russia and Ukraine. But let's get to our first segment of the day then. Hormuz joins in now from the big wall with the top stocks and movers of the day. Hormuz, over to you.
Well, earnings reactions continue in both sides of the spectrum actually, with good and bad reactions to results. And Gillette was the number that came out just a few minutes before market closing. At one point was up 11% as an earnings reaction, ending the day 7.25% higher. A strong operational performance coming in from Gillette. GE Vernova, of course, results came in after market hours on Friday. The stock remained in a 10% upper circuit through the day. Panama Petro rate gain numbers came in during the day. The mixed reactions coming in on both of these companies. And Sarda Energy, of course, an earnings reaction with the margins narrowing compared to the previous quarter, and that resulted in the stock ending 5% lower. Some of the newsmakers in today's session, and and they are kind of earnings reactions as well, with BEML 15% higher after some strong management commentary coming in earlier in the day when they spoke to us. Balkrishna Industries, of course, after the downgrade that came in from Nomura, was down in a 10% circuit but later recovered to 27% lower. Honasa giving up some of Friday's gains, was up almost 18-20% on Friday, gave up some of that. And Eternal, of course, bracing for outflows of close to around 900 million over this course of this week, ending 4.5% lower. And Camlin Fine, of course, after that very strong brokerage note coming in today, 15% higher on that stock. PSUs did well in today's trading session, most of them at least, with HUDCO leading the pack, 4.5% higher on that stock, and similar gains seen from RVNL, Concor, BHEL and IRFC as well. And lastly, stocks that did well on the back of strong volumes, and of course GNFC continuing to move higher, 6.5%, and Emcure Pharma, the third day of gains, now another 9% surge, adding to the gains seen on Friday and Thursday. Phenolics, Linde and Timken too seeing gains on strong volumes. And lastly, stocks that bucked the trend in today's session, the names like Hitachi Energy, Dalmia Bharat, losses there anywhere between 3% to 5% in today's session. Back to you guys.
Take that point, a bunch of stocks on our radar. Those were the top stock movers. Thank you, Hormaz. Let's cut across to our guests now. We do have Sudeep Bandyopadhyay of IndiTrade Capital and Jay Thakkar of ICICI Securities joining in. Jay, the Nifty seems to be fulcrumed around the 25,000 mark. If you look at the option action, tells you that maybe, over the next couple of days, we're looking at a range between 24,800, 24,650 to 24,700 in terms of support, and on the way up, maybe 2,500 and 25,200 as the congestion zone. Would you concur with the same, or you have a different view?
Good afternoon to you, Mangalam, and good afternoon to you, Ekta. Absolutely, as you rightly said, that's been the pretty much, the range for the Nifty, 25,200, 24,800. And in fact, Mangalam, I would say that Nifty, in fact, managed to bounce back quite sharply, last week, despite, it, reversed from 25,000 on multiple occasions. It went to 24,500 odd levels, probably, and 300 odd levels, rather 3 to 4, 500 levels, and reversed from there very sharply, and it's back to 25,000 and above. But then it's not able to sustain higher above those levels, despite good amount of put writing both on Nifty and Bank Nifty. So Bank Nifty too is struggling, Mangalam around 56,100 levels, that is his all-time high, and Nifty as well. So according to me, the fresh long position should be now created on Bank Nifty above its previous swing high, as well as on Nifty. Those highs are taken off. I mean, you might get a swift move towards 25,500 on Nifty, and probably 57,000 to 57,500 on Bank Nifty. Most of the private sector banks, Mangalam, are stuck within a range. Probably you say either Kotak Bank, Axis Bank. One is quite evident, that's HDFC Bank, which has a higher weightage as well. So they are all stuck in a range, and if those range breakout comes, probably then you'll get a breakout, else it can continue to consolidate. One thing interesting to notice, the last part which I have to make, is the India VIX, Mangalam, which has been bouncing back since past couple of days, and which is acting as a hurdle, or probably is one of the reason why Nifty is not able to sustain the high levels. If at all we see VIX going up, there can be some further consolidation or correction. If VIX cools down, probably you might get a breakout.
Okay, well, Sudeep Bandyopadhyay also joins into this conversation. Sudeep, welcome to the show. If you could just give us a sense in terms of how you approached the broader markets today, any stock-specific trades?
I think there were a lot of interesting pockets in the market. And one interesting pocket which I continue to monitor is cement. I mean, it's got nothing to do with today's what happened in the market, but I think there are opportunities in cement, and this is completely Trump-proof segment. So one can look at opportunities in cement. The other interesting thing in today's market, at least I noticed, is Gillette numbers. I think, while we have seen and heard from multiple FMCG companies that there are challenge in urban demand, at least semi-urban demand in pockets. But Gillette's numbers actually completely contrary to that. And it probably gives us the initial rays of hope that things are improving, and probably next few quarters we'll see much, much better numbers from FMCG companies as well. Monsoon definitely should give a boost, and we'll wait and watch what happens there. The last but not the least is the pipe companies. I think there are a lot of interesting things happening there, and the restocking is happening and will continue to happen. That gives a significant bump up. Though the Q4 numbers were not good, but I think going forward, the pipe companies' performance and pipe companies' even market performance should be better.
We take that point entirely, Sudeep. Just a word on Gillette as well. The large part of the revenue growth was on account of them having expanded their market. Up until now, Gillette was the best their man could get. Over the last couple of years, they've started to ramp up their portfolio on the female side as well. So Venus, which is one of their strong arms, which has been growing at 2x the pace of men's shaving units, has actually led to this growth, and lower steel prices help them as well. So while the company saw revenue growth of 13%, the net profit actually grew by 60%, and that was the big driver out there. The stock obviously has seen a big rally already, and the street believes that there is room for more. Let's talk about the other important story now. In a big relief coming in for JSW Steel, the Supreme Court has ordered a status quo on the liquidation proceedings of Bhushan Power and Steel. The Apex Court has allowed JSW Steel and its committee of creditors to file review petitions in the case as well. It said that the 30-day period to file a review wasn't over yet. Ashmit joins in with the details on that one. Ashmit.
Well, what we understand is that clearly there's a big relief that's come as far as JSW Steel is concerned. What we're given to understand is that the Supreme Court, in very clear terms, has directed for a sense of status quo, no liquidation as far as Bhushan Power and Steel is concerned. That's the core concern that had been raised by the COC, that had been raised by JSW Steel. Now, bear in mind that former promoter Sanjay Singhal had moved the NCLT and had sought for an expeditious liquidation of Bhushan Power and Steel. Now, what JSW Steel, as well as the COC, when appearing before the Supreme Court, told the highest court is that, look, there is still some time left as far as filing of the review is concerned, that if liquidation takes place, that will leave JSW, that will leave the COC high and dry, that the COC themselves are facing questions of how this return, if the Supreme Court order is to be complied with, how the return of funds is to work, how the return of securities from JSW back to the lenders will work, what legal options there are before the lenders, before the JSW. And these were questions basis which the Supreme Court said that in the interest of justice, it's best advised that at this point status quo is maintained. There is no further movement, there is no liquidation that takes place, and that is the best way to ensure that if and when the review is filed, there will not be any further liquidation. Having said that, speaking of a review, the Supreme Court, as a part of its order, does record indicating that both JSW Steel as well as the COC are contemplating relief measures like filing of a review petition. Just a small caveat there. As per the Supreme Court rules, there's a 30-day window for filing of review petitions. Given that this judgment came on 2nd of May, 2nd of June naturally would translate into a deadline, a 30-day deadline. So that's the window that JSW Steel and the lenders are looking at in terms of filing of a review petition. But for now, status quo, no liquidation to happen as far as Bhushan Power and Steel is concerned.
The matter is sub judice, so I may not be able to comment too much, but I think it's important to note that we have implemented the resolution plan in full compliance with the law, and we have been able to successfully revive the asset to its present condition where it is today, with increasing operational output, with increase of capacities. The second thing is that we have analyzed the judgment along with our legal advisors, and we believe we have strong grounds for availing all legal remedies available to us.
Okay, all right. Well, Sudeep, have you been tracking this story, and what would your would your outlook be on JSW Steel?
Well, JSW Steel, otherwise everything else is fine. I think they're doing the right things, but this is such a confusing scenario that a lot depends on how things move in the Supreme Court. Yes, today's was definitely a relief, because immediate liquidation would have created utter chaos in the entire system, I would say. So this is definitely a relief, and hopefully their review petition will be considered. The way I look at it, some penalty, some fine can be imposed, but unwinding the transaction, which has already happened years back, I think it will set a bad precedent and create a lot of confusion. So in JSW's interest, I think this transaction should continue. Otherwise, absolutely fine. JSW and overall steel industry, we are positive.
All right. Chartically, how does it look? if I had to ask, the other guest, Jay.
Yeah. Well, Mangalam, see, I would say that JSW Steel, the overall trend technically is definitely positive. I mean, the stock has been, moving higher in an upward sloping parallel channel. I mean, since past couple of trading weeks, the stock has formed a kind of a symmetrical triangular pattern, which is a continuation pattern, and the range has been 940 on the downside to 1050, 1060 on the upside. So it's been of around 100 to 120 points kind of a range. I think the probability of a breakout on the upside is higher as the momentum is favorable, for the bulls. It's well in the buy mode, as well as Mangalam. Since the overall rise, we have seen as far as derivatives data is concerned, the futures OI had come down continuously, clearly indicating long liquidation. But since past couple of trading sessions now, there has been a sharp uptick in the open interest with the price moving up, indicating that there's a long build-up and a higher chance of a breakout from this range, 100, points range on the upside. So I would say that until 940 levels, I'm not broken on the downside. The trend remains bullish. And if breaks out, I mean, it can go to 1200, 1250 levels as well.
All right. Thanks a lot for that. Let's talk about the other stock on our radar then. Zomato's parent company, Eternal, fell nearly 5% after the MSCI and FTSE announced weight reductions for the stock. The move came after Eternal lowered its foreign ownership levels. Vivek Iyer joins in with the details. Vivek.
Well, that's right. So, last week you did see the news flow come about where, the board and the shareholders had gone ahead and approved reducing the investment limit as far as foreign ownership was concerned to 49.5%. Earlier it was 100%, as high as 100%, and they went ahead and reduced it to 49.5%. So along expected lines, quant analysts had expected that this particular move or reduction as far as the foreign ownership limit is concerned would go ahead and trigger reduction as far as weightage of both MSCI as well as FTSE indices as far as the treatment of Eternal was concerned. So on Friday, you did see an announcement come about both from FTSE as well as MSCI. FTSE said that they would be reducing the weight of Zomato or Eternal on May 27th. The expected outflow is close to $380 million. These estimates are as per IIFL Capital. Now, MSCI, remember that particular outflow is quite higher. On May 30th is when this particular outflow is anticipated, and outflows of close to $460 million. Again, the estimates are as per IIFL Capital. This proved to be an overhang on the stock today, given the fact that significant passive outflows are expected during the course of the week.
Okay, all right, Vivek. Thanks very much for that. So that's the update coming in on Eternal. But Divi's Labs is one of the stocks that I looked at. It was one of the top gainers on the Nifty today. Now, the reason is that they've signed a long-term manufacturing and supply agreement with a global pharma company to manufacture and supply advanced intermediates. They say that they're expecting meaningful revenue contribution from this particular agreement, and the company is not permitted to disclose the name of the customer or any quantitative information. But the cost of the capacity addition for manufacturing under this agreement is estimated to be 650 to 750 crores, which is going to be paid by the customer phase-wise under the agreement. With this, the company has now signed 3 long-term supply agreements. They've signed 2 long-term supply agreements earlier, and both those contracts were related to custom synthesis projects. One was with advanced intermediates and the other was with an active API. Morgan Stanley is bullish on Divi's Labs. They have an overweight call, target 7185. According to them, both orders imply incremental revenues of 1690 to 1890 crores versus FY25 revenues of 9300 odd crores. But Sudeep, have you looked at Divi's Labs, and what do you think? Where do you think the stock could go from here, considering that it's so expensive and it has punchy valuations?
Well, it was always expensive and it continues to remain expensive. But I think all these new contract signing definitely gives them a good runway going forward. And, if their top line can go up by about 15-20% based on these contracts, new contract, I think that's pretty interesting from this company's point of view. If you're a patient investor and can allocate money for 1 year plus, I think definitely even at current level, Divi's look good. I think we are looking at about 15% upside from current levels.
All right, 15% upside from current levels. Thanks a lot for that. In fact, we'll take a short break, come back, get you more on the markets and top corporate voices along with the key market events to watch out for on the other side. Stay tuned.
Welcome back. Well, you're still tuned into Markets Forward this Monday afternoon. Two IPOs have opened for subscription today, Aegis Vopak and Sklosh Bangalore. Well, tell us more, Mangala.
You know, after a very long time, Ekta, the IPO market is back, and it started with a couple of fresh issues. So we have Aegis Vopak, which has a 2,800 crore fresh issue. Schloss Bangalore has a 3,500 crore issue, of which 2,500 crore is fresh issue as well. What does Aegis Vopak do? It's the largest Indian third-party owner and operator of tank storage terminals. So all the liquid and gas storage that takes place, they're the ones who are responsible for storing that and transporting that. Well, the management has said that with the money that they are raising, they will, use about 2,000 crores to repay their debt, and their bank borrowings will become zero, which will save them 160 crores in interest cost, which will flow straight to the bottom line. They have two liquid terminals for the company, which have recently become operational, and H1 will also see two cryogenic tanks, which will come on stream. So all of this would mean that FY26 will be a marked jump in performance. The post-issue market cap that they're seeing is close to 26,000 crores. So even if they more than double their net profit from here, 85 crores to about 300 crores, still trading at around 85, 87 times one-year forward earnings. Not particularly cheap, but that's the market that we're in right now. The other one, Schloss Bangalore, you would better know it as the company that owns and operates the Leela Palaces, the Leela Hotels and the Leela Resorts. Remember, HLV was sold to Brookfield earlier, and now Brookfield has come back with Hotel Leela. The portfolio comprises of 13 operational hotels with 3,500 keys. They are the EBITDA margin leader with nearly 50% as compared to Indian hotels at 33%, Chalet Hotels at 38%, and Lemon Tree at 45%. They say that they are, in the luxury segment, and they will continue to sustain their margins. They too are using these funds to become debt-free, and they will save about 200 to 210 crores in interest costs. Hospitality segment, they say, will grow much faster than the GDP growth. Leela's market share in luxury is about 10%, will continue to grow. So what we'll do is, we'll hear out the management bites on what they had to say, both Aegis Vopak and Schloss Bangalore.
Two liquid terminals have just become operational in March, which is a JNP in Newport, as well as Mangalore expansion. And then two cryogenic terminals at Mangalore and Pipavav are getting commissioned in H1 of the current year. So they are like factories. I have 22 working sites. I have developed 225 acres of port land in 6 ports. And these are going to triple my LPG capacity, the two cryogenic which is going to come. The terminal is capable to do 6 million tons of throughput. Okay. My rate of revenue is 1,250 rupees. I have spent only 900 odd crores for that terminal. Okay. Now, as the utilization will ramp up in 5-7 years, I would be reaching that peak. Okay. So you take your take that what a potential that terminal has, because I will not be able to step into that forward.
Proceeds of the IPO, about 2,500 crores, which is the primary issuance. A majority of that capital will be used to reduce leverage or debt on the company's balance sheets. As of March 25, the company had cash of about 1,200 crores on its balance sheet. So post-IPO, the net debt position of the company, gross debt minus cash, will be close to zero. Firstly, the focus of the business is on luxury. Now, in the hotel business, a large part of your expenses are fixed in nature, which means if you can command pricing premium and if you can invest back in your real estate or your property business with lower fixed heads, which can be sustained, that contributes to your current margin.
Okay, well, now let's go across to the key voices of the day. First up on the list is BEML. The management guides its order book to reach 22,000 crores in FY26. That's not all. It expects revenue growth to be 20% with an EBITDA improvement of 150 basis points. The company is anticipating a phenomenal growth in its defense business this year. The management says it's quite optimistic about large defense emergency procurement orders. The defense revenue contribution is set to increase to 30% in FY26.
Next up on the list, we have Ashok Leyland, the management optimistic about FY26, saying that growth rate should be very healthy from the second quarter, as decline in interest rate and macroeconomic activities will actually drive growth in this FY26 bus segment. That's the one where they will see healthy growth, while medium and heavy commercial vehicles will see mid-single-digit growth in FY26. They continue to focus on margins, but claims that it may take 2 to 3 years to achieve that mid-teens sort of EBITDA guidance that they have. On Hinduja Leyland Finance, though, management of Ashok Leyland says it will be able to list that very soon once the approvals are in place. Lastly, we had Indigo Paints on our radar as well. The company has witnessed gradual improvement in demand, further improvement in the first quarter. the management believes is likely, with the industry just months away from demand normalization. They're aspiring for 5% market share over the next 3 years, with 3% right now, and margins will remain steady as they grow more than 20% as the industry normalizes.
Okay, and before we wrap, let's bring you some key market events to watch out for. Ria is standing by with the key events for tomorrow.
Well, yes, let's take a look at the most important events to watch out for tomorrow. We'll have a lot of companies reporting their quarter 4 numbers, which will include LIC, Bharat Dynamics, DCX Systems, Gujarat Fluorochemicals, Hindustan Copper, JK Lakshmi Cement, NMDC and NMDC Steel, PNG Health and Techno Electric as well. We'll also have Hindustan Copper holding a board meeting tomorrow to consider a fundraise of up to rupees 500 crores. Going on to the economic cues then, in Europe, the economic sentiment will be important tomorrow, as well as the consumer confidence data in the US. And we'll also be watching out for the Bitcoin 2025 conference that is going to be starting tomorrow in Las Vegas.
All right, with that, it's a wrap on this edition of Markets Forward. We'll be back with more news and updates on the other side. Thank you so much for watching CNBC TV 18.